Hello, I'm Annabel Brody-Smith, Communications Director of the Association of Investment Companies. In September, the former Chancellor announced that the VCT scheme would be extended beyond 2025. This was welcome news for the UK's small and medium-sized enterprises. VCTs play a vital role in supporting these businesses and have made over 1,000 investments into 530 companies in the past 5 years. With slowing economic growth and high inflation, this support to young companies is much needed. But what is the investment outlet? And how can VCT support ambitious British companies in these challenging times? Today, I'm delighted to be joined by 3 VCT investment company managers. We've got Ewan McKinnon, who's the investment partner at Maven Capital Partners, which manage the Maven VCTs. Richard Moore, co-head of investments at Calculus Capital, which manages Calculus VCT, and Stuart Gill, manager of the Proven VCTs. Right, on to the questions. Why has there been strong demand for VCTs? And I'm going to ask that to Ewan.
Well, I think if you look at VCTs, it allows investors access to a wide variety and a wide pool of really interesting high growth businesses, Annabelle. Some of the most exciting companies in the UK. The fact that it's a pool of businesses means that, the risk is mitigated compared to investing in 1 or 2 businesses on their own. The returns have been encouraging over the last 3, 5, 10 years, and the returns are often uncorrelated to the main markets. And then finally, of course, there's the 30% tax relief for investors on the way in, and tax-free income and capital gains on the way out as well. So I think if you put all of these factors together, you can see why they are appealing products.
Very attractive indeed. Richard, have you got something to add to that?
Of course. So there is a great deal of appetite and desire to invest in growth and innovation throughout the UK population. And it's an opportunity for individuals to get direct access to venture capital, which is not all that easy to do. And as Ewan says, the tax breaks are good. So the 30% up front, and then usually most CVCTs are paying a tax-free dividend. And with the changes to the pension thresholds, there are more and more people looking for other tax-efficient ways to invest.
Absolutely. And Stuart, what do you think? Why has there been such strong demand for VCTs?
Very similar answer to the other 2 guys, but I think the performance has been really strong. And if you compare it to investing in quoted shares, VCTs have beaten a basket of quoted shares over most periods that you might want to look at. So it's just the bottom line is it's just a good investment.
That's absolutely true. VCTs have held up extremely well if you compare them to the average investment company. In this last year, very tough year, VCTs have held up in comparison very well indeed. So what types of companies are you investing in now and why? I'm going to ask that to Richard.
Thank you. So we target growth, and that leads us to look to the fastest growing sectors of the economy. And we've analysed that, and we believe that is technology, healthcare, and entertainment. In technology, it tends to be hosted software that's capable of very strong operating leverage and rapid growth. In healthcare, it's a range of different things. And on the entertainment side, we favour content creators selling to the digital streamers, but also platform technologies serving those content creators.
Right. And Stuart, what type of companies are you investing in now, and why is that?
Well, I think in this sort of more difficult economic environment, we're focusing on 2 types of companies. One, which companies which help other B2B businesses, which help other companies to be more profitable. So their software enables businesses either to save costs or to maximize revenue. So an example of that would be CreativeX, which uses artificial intelligence to optimize digital advertising, which can demonstrate a clear return on investment to its customers. The other type of business is one where, even though the overall economy might be slowing, the business is a leader in a particular sector which is going to continue to grow strongly. For example, low and zero alcohol beer is a sector which is growing very quickly at the moment in the UK. We've just invested in a company, Lucky Saint, which is the UK's leading independent zero alcohol beer. And we expect that sector to continue to grow rapidly, even in a slowing economy.
That makes a lot of sense. Businesses, companies that businesses really need and market leading sectors makes a lot of sense. Ewan, what companies are you invested in now and why?
Yeah, a similar theme, and we're investing in high growth entrepreneurial businesses with a B2B business model. We are sector agnostic, but we do favour those companies that are B2B and not directly B2C. So we shy away from retail, hospitality and leisure. We like healthcare, we like technology, we like data analytics, and we really like businesses that have a sticky revenue stream. So annual recurring revenues, contractual revenues, they're the type of companies that we would favour.
Right, that makes a lot of sense in this environment. And talking about this tough environment, what's your view on the outlook for VCTs, Stuart?
Well, it is clearly a difficult period that we're going through, but it's not the first time we've seen this. And the VCT sector has always been resilient through downturns. I think what you'll find is at the moment the managers of VCTs will be working very closely with their portfolio companies to help them navigate through these choppy waters. In particular, helping companies focus on profitability and cash flow a bit more than growth, which has maybe been the main target over the last couple of years. But making sure that businesses have got strong balance sheets and ample cash to see them through the next couple of years. But I think in the medium to long term, the outlook for VCTs is very strong. And we've found in the past that investments made during and shortly after recessionary periods have actually turned out to be the strongest performers in our portfolio. So we think that the investments we make over the next 24 months could turn out to be really good vintages in 4 to 5 years' time.
Well, that makes a lot of sense, Stuart, because obviously after a recession, then you generally get growth. So that really makes sense when you're buying them at good valuations, competitive valuations during the recessions. That makes a lot of sense to me. Ewan, what's your view on the outlook for VCT?
Yeah, I would totally agree with what Stuart said there. And if you look historically, Annabelle, that the likes of Airbnb, that was formed post the banking crisis. So there's been numerous examples of unicorns that have come out of periods of difficulty, and so hopefully post the recession, which we're inevitably going to enter this year, there should be good growth opportunities. I still think there's a lot of opportunity for VCTs. The market that we are investing in is underserved. There are a lot of bigger private equity firms don't like investing in high growth early stage businesses. Debt is getting more expensive, and we're going to see less debt funds entering or remaining in our market. So there's going to be many opportunities for VCTs to invest in the next unicorns of the future. So I see the next couple of years will remain a buoyant time for VCTs.
Excellent. And Rich, what's your view?
More of the same, really. It is definitely a more challenging economic environment that we've had for a couple of years, but it is a good time to be putting capital to work. So while spending a lot of time focusing on our existing portfolio and supporting them, we are also keen to get out there and find those growth opportunities, which you were just describing, the during difficult times unicorns that will come out on the other side. I mean, ultimately, VCTs are very patient capital, and it's the funds that we put to work now, the seeds that we sow, that will generate the growth over the next 3, 4, 5, even 6 years and produce those exits in the future when times are that much stronger.
Excellent. Well, quite exciting, actually, in terms of an outlook. So what are the economic benefits that VCTs are providing amid this sort of slowing economic growth? And Ewan, I'm going to start with you on this one.
Sure. I mean, if you think about the companies that VCTs are investing in, without VCTs, many of these companies wouldn't receive any funding, Annabelle. We are in a market that is underserved, and without our investments, a lot of these companies would stagnate, might not even be in business. If you look at the stats in terms of 2022, the companies that are backed by VCT companies delivered over 12 billion in revenues, 2.9 billion in exports, 550 million in R&D, and over 70,000 people are employed. So, big contributor to the UK economy. And if you look at the types of people that the VCT companies employ, they're all higher skilled roles that they recruit. So if you look at the average salary of a VCT portfolio company, it's significantly higher than the average wage in the UK. So, VCT portfolio companies are big contributors to the UK economy, both in employment, but also in tax take as well.
Well, very important to the UK economy. In that case, VCTs are. Richard, would you like to add, what do you think the economic benefits of VCTs?
Well, of course, the UK economy needs a higher rate of sustainable long-term growth. In reality, that is unlikely to come from increased central government expenditure. It's much more likely to come from investments in innovation, and that really comes from small innovative companies, which are exact sort of companies that VCTs back. So ultimately, the whole VCT regime is a very clever way of the government of encouraging people who are out there every day hunting for those innovative companies to find them and back them and help them to grow. So really, it's a long-term growth opportunity for the UK economy to get more money into VCTs so we can back more innovation and growth.
Absolutely. And Stuart, have you got anything to add on the economic benefits?
It's very difficult to add anything to those comprehensive answers, but I think VCTs are helping to drive job creation, high skills, and innovation in general. So they're doing a lot of great things for the UK.
So it's very interesting because you've got all those tax breaks and you've got the economic performance, but you're also helping the UK economy, helping small businesses grow bigger, and that's very satisfying as an investor.
Absolutely.
Moving on, how are your investee companies helping with social or environmental issues, what we in the investment business term ESG issues? Stuart?
Sure. Well, I think virtually every business we invest in these days is very conscious of the need to improve their ESG performance. In the consumer sector, we're seeing things like reusable packaging becoming completely prevalent. Consumer businesses need to become more conscious of these issues to attract the younger consumers to whom this is really, really important. And even in the tech sector, businesses need to feel that they're delivering, or their employees need to feel that there's a mission. And so in order to attract the best talent, again, they need to be very aware of ESG issues. We at Berengier have taken a framework developed by one of our portfolio companies and turned this into something called ESG VC, which is a program now used by over 200 venture capital firms. It's a framework of 50 questions that can be used by portfolio companies to evaluate their ESG performance and highlight areas for improvement. And we insist that all of our companies do this when they first come into the portfolio, and then on an annual basis we can help them to measure improvements in this area.
Excellent. That sounds like a great innovation. Richard, talking about ESG benefits here from VCTs, what are your views?
So we focus very much on companies that are building portfolios of intellectual property and high academic-driven assets. So there's quite a lot of societal benefits we see in that around improving the overall IP base and the inherent strength of the UK economy. And there's job creation on the side as well. So it's a broad benefit to the UK economy. At the same time, similar to Stuart and the other VCTs, we are very focused on improving the ESG performance of our companies. So we will work with each of our companies to establish a sort of benchmark of where they are from an ESG perspective and help them over time to try and improve that going forward so they can contribute more to that ESG dialogue.
Excellent. And Ewan, on ESG, how do you work with your companies?
Yeah, very, very similar, if I'm honest with you. We also, during due diligence, look at each target company and understand where they are now And then what we do is we monitor that on an annual basis thereafter. So we look at all the ESG metrics and have it similar to what Stuart mentioned, a framework which we measure. So we take it very, very seriously. Most of our companies have KPIs that they then measure, whether that is reducing plastic consumption, recycling, and a number of companies have targets to get to net zero as well. And one of the portfolio companies I'm involved in is looking to get to net zero actually by 2030, which is significantly ahead of most countries' net zero targets. And there's various ways that they are doing that. We then share the outputs from the portfolio companies around the rest of the group, and there's ways that they can then improve and share best practice.
Well, it's really encouraging that these portfolio companies are helping with environmental issues or social issues. Really encouraging and great to hear. I'd like to thank our VCT managers very much for joining us today. It's been great to hear their views on VCTs and their investments. But I'd like to emphasise that we don't know what's going to happen in the future. Investment is for the long term, and it's important to have a well-balanced portfolio. If you are in any doubt, you should talk to a financial advisor. Thanks so much for watching.